A very good evening and a warm welcome to Weekend Dialogue. Tonight in our studios we have with us Dimantha, the Head of Research of First Capital Equities, joining us to talk about the capital market and of course its way forward. Thank you, Dimantha, and good evening.
Good evening.
Okay. Tell me, Dimantha, now to start off with, I think First Capital Equities, all this time you all have been involved in corporate debt products, but now I think you all have broad-based your investment products. Yeah. Give us a brief about your company and how you all have ventured forward.
Basically, First Capital Group has been more or less involved in fixed income and corporate debt securities. That's what the investors know First Capital for. But now recently the group has decided to take an initiative and go into the equity side of things as well by acquiring a stockbrokering firm. So we are the newest entrants to the First Capital Group. We are named as First Capital Equities, and it gives the investor a full range of investment opportunities that are there, the fixed income, the corporate debt, and now the equities as well.
And if you talk about the corporate debt market, how do you see the growth in this segment going forward?
Basically, if you take about 2 years ago, it was the listed securities debt market was actually negligible, but then the government brought in some incentives, like they have waived off the withholding tax on interest on corporate debt instruments, which saw a big boom that came into the listed corporate debt market. So which has given a significant rise in volumes. Now if you take those days, there was only about a transaction or two per month, but now you see actually a transaction or two happening every day. This is not a lot in terms of the debt market, but there is a significant growth.
So this is good, and the outlook is positive, is that what you're saying?
Outlook is positive. I think we need a lot more listed debt securities to come into the market to improve the volumes. And
when you say we need a lot more, what do you think needs to be done in terms of promoting this?
I think as an initial step, giving incentives to corporate debt has been a big boost, but it takes time to develop. Now if you take right now the country's credit growth actually has slowed down, but if you take the corporate debt market, that has had a major boom. So which means that companies have selected corporate debt instead of going into bank loans. So it has already started to create competition, and so competition on long-term fixed rate instruments.
Right. Around the world, Dimantha, I think many corporates use long-term bonds to raise funds, but in our country the situation is a little different. What do you think is the problem here?
Yes, I think corporates were used to taking bank loans all this time, but now only they have started to they have decided on the option of going into corporate debt and bonds. So this is a great positive, and it will help the companies as well to do their proper forecast as well, because if the interest rates are floating and they start fluctuating up and down, it's difficult for a company to have their growth plans. But here you have 3 to 5 year debt instruments mostly that are coming in, so you can have plan 5 years ahead at a fixed rate.
Right. If you move on to talk about the stock market itself, what do you think are the present challenges? How do you see the developments? We see a lot of companies listing, but is this enough? Are we doing the best of our potential?
If you take the stock market, the development has been good. Yes, there's a lot of new entities coming in, but there is a issue related to the public float that is there. The most companies, the public float has been a problem,
And I think there is a regulation and many of them delisted because they couldn't meet this.
Yes, actually the regulations got implemented in 1st of January, and now I think a lot of firms are trying to meet the public float regulations, and whoever cannot meet the regulations are getting delisted. This is important mainly for locals plus the foreign aspect of it, because now most funds, foreign funds, will have a minimum investment amount.
Right.
Like a lot of big foreign funds have like a $10 million minimum investment criteria. So is there selected counters in the in our market where you can put in $10 million, put in and take out without a problem.
Right.
So that's where the free float has become an issue. That's where foreign funds actually find it difficult to invest in the market. So this is actually a great move in terms of what the regulators have done.
Right. And in terms of building confidence in the market, there still seems to be some sort of lacking area. What is this? What do you think? As you know, you all do a lot of analyses, you all talk a lot about this, but what is missing here?
Okay, what has been the problem is, if you take during the 2011, 2012, the market went up at a rapid pace, but the earnings didn't follow. Earnings of listed companies didn't follow the same pace. So because of that, the market started to come down again. But the decline in the market was very sharp. So people and especially the retailers still remember the loss in values that they have had in their portfolios.
Right.
So it will take a bit of time for them to build confidence, and also I think what's more important is to educate the investors, because the most investors have started to because of the hype in 2009-10 have started to look at the short term aspect of things. But what we are trying to focus on is to educate the investors on into looking into the long term aspect of equities, because that's where the real investment should lie. There is a risk in investing in the stock market, but what the investor should expect is something, a premium above the fixed income rates that you are getting in the market. So it's in comparison to that.
Rather than focusing on short-term gains that they are now doing. In terms of regulation, I think there have been a lot of regulation brought in to tighten market operations and also ease market operations on both sides. But what challenges do you see going forward, and what regulatory moves do you think is needed?
I think what is required is, now if you take the population of Sri Lanka, only a very handful of people are investing in the stock market. Even if you take foreigners, high net worths, there is only a handful of investors that are actually in the market. So what we need to do is bring in more firms listed in the market, increase the market cap. In line with that, we have to bring in broad-based the investors as well. So with the increased liquidity, I think higher number of foreign funds, even locals, will start looking at the equity market more positively, and there will be no issues in putting money in and taking money out of the market. Now, if it's a small pool of people, when you're starting to take money out of the system, there is likely to be a huge drop in share price if it's a big investment. So ideal scenario is where you need to broad base the number of investors that are there, and bring in more foreign activity and foreign funds into the market.
Right. Finally, what sort of a message would you give investors at this moment?
Yes, I think now as an investor, what you should be looking at is the total return that you get out of the market. Most people ignore the only take into account the capital gain aspect of it, but try to ignore the dividends that these companies pay. There are so many selected number of companies at the moment itself which are paying about over 8% of dividends. So that is a major component that you need to take into account when you're dealing in the stock market, as to identify what the total return you're getting, capital gains plus the dividend income.
Right. Well, we had with us Dimantha Matthew, the head of research of First Capital Equities, joining us on Weekend Dialogue. We'll see you again after this break on Biz Roundup.